Hello and welcome to Voice of Super, ASFA's podcast for the superannuation industry by the superannuation industry. I'm Madeleine Morris. I'm the Chief Strategy, Corporate Affairs and Experience Officer here at ASFA. And today we are talking about the very, very important issue of service in superannuation with two experts in the field. We've got Brendan Daly, who's the Chief Service Officer of Rest Super, and Jocelyn Furlan, who's a consultant, Chair of ASFA's Service Standards Workings Groups, and also the former chair of the Superannuation Complaints Tribunal. Very well known to all of you. Thanks for joining us here, guys.
Thanks, Madeleine.
Lovely to be here.
Brendan, can I just start with you? I just want to take a step back and ask, what do we even mean by service in superannuation?
Yeah, look, I think that's an interesting question. And when I think about it, I think it means the same as anywhere else. Like, are you feeling looked after? Are you being kept informed? Are you being made as fearless? Are you being cared for, and that someone's looking out for your outcomes? The difference in our market is that it's got a very distinct competitive profile. You engage with other utilities almost constantly, and you would know if you're getting good service, for example, from your internet provider because it's either working or it's not. And people don't tend to engage with their super on that same sort of basis. Unlike investment returns or insurance premiums, service levels are only impacting you when you actually choose to engage with your fund. And sort of normally they tend to engage with you for routine matters, but also for things that are really impactful, like insurance claims. And you need to make sure that sort of like you're there for them in those moments that matter.
Jocelyn, you've been at the forefront of members' interaction with their super funds for decades now in many different guises. How have you seen that change? Like, how have you seen the superannuation sector's view of service change, and how have you seen members' expectations change?
So I think there has been as the super industry has matured, there has been a significant shift away from the kind of interactions that Brendan was talking about in the initial stages of superannuation, which are very, members are choosing to engage when they need to engage, otherwise it's a bit of a set and forget. I think as the system matures and the population ages, many more of those interactions are not by choice, so that they are the moments that matter that you were referring to. So many more of the interactions now are in relation to insurance claims or death benefit claims because the amounts are so much higher. And I think the structural change of the retirement incomes covenant also means that people are now interacting with their superannuation very regularly because we are called on by the government to provide services into retirement, and that looks different from a set and forget accumulation. And so I think there's been a fundamental shift in the role of superannuation from being a pure trust where I give you my money, you look after it really well, and then when it vests, you give it back to me in a better shape than I gave it to you. That's not how superannuation is anymore. That might have applied 10 years ago, but now it's much more engagement and a day-to-day interaction for, as you say, the moments that matter, and there's much more non-discretionary interaction between super fund and their members now.
As someone who's been around this for so long, do you actually think that superannuation funds are stepping up to meet those change requirements for service?
I think the intention is there. I think there is some work to do to actually change the lens that we approach how we act as trustee of superannuation fund members. And I think that we've got some work to do. And I think that there's some structural questions around that are, I don't know whether trust law in a retirement environment is actually the right structural basis for the super industry to genuinely be able to help members. I'm not sure where we're at with the sole purpose test, which says that, again, the sole purpose is to provide a benefit in retirement, not to provide advice, guidance, support, assistance to members. So I think there's some really big, interesting questions we could be asking about. Is the structure hindering our becoming what we really need to be for members, for superannuation fund members and retirees in Australia? Similarly, I do think we have some work to do in terms of recognising that there is this much more frequent engagement with super that is not discretionary. So when I say that, I mean death, disability and retirement. And we need to build a system that supports us running a business to support people who need us in those moments that matter, which may not be their choice. Their expectation, even though the frequency may not be that like it is with the banks. I think the expectation of the outcomes is like it is with a utility provider or a bank. And I think we have to think about that as an industry and think about, what's our best way of responding to that, and how do we get the technology and the supports right so that when they do engage, they get the service that they expect.
Yeah, absolutely. No, and I completely agree. And I think it goes more to, maturity of the industry around those sorts of things. That, we are on a journey, and where we were sort of like a few decades ago is different to now. And it'll be different again in another decade or so from now, because the fundamentals of, the shape and distribution of superannuation accounts will be very different. Higher balances, more people in retirement and the like. And we'll be on that sort of like level footing with utilities and other things like banks. But I think the other thing that's really interesting to note in that space as well is that, there is a very, distinct edge to the type of service that you want to provide. And so whilst, there's some basics of service, as we talked about before, like being felt like as though you're being looked after and your concerns being listened to and the like, there are sort of elements to what you're actually offering and how you differentiate your service compared to others as well that comes into, how we think about sort of, service levels and the like, because there is a number of trade-offs that, any fund needs to make when it thinks about sort of like what its customer service looks like. You may have some customers that want calls answered in 20 seconds. You may want some, sort of customers that want long, meaningful conversations with highly informed experts. And, you may want customers that want really low fees. And the interesting thing about that is all those things tend to, work against each other in different ways, so that you can, you have to make trade-offs around what type of service do you want to provide. And sort of like the market is, sort of like opening up and expanding. And if you've got a digital-only fund versus one that offers high touch versus one that's low cost, they're all very different. And so how do we actually define and, communicate service levels or service standards in a way that's fit for purpose and actually reflects the fact that you want to have that type of competitive differentiation so people can actually make choice around the type of fund that they want to engage with.
That's really interesting, Brendan. So, we often, I think, probably tend to think that the in the hierarchy of what members want, returns is number one and everything else comes down. Do you still see that as being the case, or do you see a point where for some members that service is actually the most important thing?
Yeah, and probably is becoming more so, I would say. I think for a very long time, and probably for a long time still, like, high net returns is really important, because that is the probably number one factor in sort of like what your retirement outcomes is going to look like. But some sort of clients, particularly if you're low balance members, they like low costs as well, because costs make up a big part of that equation. But particularly with retirement, and as we get higher balances and people wanting to feel comfortable and supported in retirement, it will be the types of services you offer might be what customers are choosing. It could be, free advice or guidance at the other end of a phone call, or it could be a digital solution that helps you plan for your retirement or preparing for retirement and those sorts of things. And so those are the types of services that funds will look to offer. I suppose underlying that there will be, the fundamentals of ensuring that you have, in most cases, a call centre that's actually answering calls within an appropriate amount of time and, providing the right sort of responses. And again, coming back to, particularly those moments that matter around things like insurance, making sure that they can be responsive, understand your needs and give you the right advice and guidance and support at that time.
Jocelyn, you've just led two ASFA working groups. You've just chaired them, working on two new service standards around insurance claims handling and death benefits handling. They were big pieces of work, I know. What sort of improvements do you think that members are going to see from that?
So I think one really good outcome was the opportunity for the industry to think about what kind of service standards it wanted to have and to reflect on concepts like defaulting to vulnerability when people make either death benefit claims or insurance claims, And I think it was also, so it was a really great opportunity for the industry to step up and say we're prepared to set some standards for member services across the industry. I think it's really great for members because they can help manage expectations, and I think out of the service standards, the main things that came out of was the lens that we need to have. To Brendan's point earlier, exactly that we care, we understand, we will take the necessary steps to make you feel supported in whatever it is that you need to, however you need to engage with your fund, but also communication. So to really think deeply as an industry, are our communications meaningful? Are we setting expectations that we can then meet for members? Are we explaining the processes? Remembering that this is a compulsory system. We are the only industry that compulsorily takes people's salary away from them and puts it into our system. So we have a significant duty of care when it comes to supporting members when they do want to engage with their fund. And so I think these standards will help to demonstrate, firstly, our industry's preparedness to be accountable, but also it gave us an opportunity to really think what good service standards look like, and then implement those service standards across the sector.
And how will they interact, those service standards, with the mandatory service standards, which is currently being consulted on by the moment about the government? They've still indicated that they are going in that direction. How will they interact?
So I think the ultimate goal is for them to complement the mandatory service standards. So once the mandatory service standards are agreed on and finalised and issued, I think we will review these service standards to make sure that they complement each other and support each other. And it might be that the industry chooses to have higher voluntary service standards than the mandatory service standards in certain areas as well. So I think that will be a really great conversation to have. And I think, complementary and supplementary to the mandatory service standards. But obviously if there are mandatory service standards that are higher or different from what's in these current standards, we'll amend them accordingly and make sure that they work together for the benefit of members and the community.
Brendan, with those mandatory service standards that Treasury is working on at the moment, ASFA is certainly supportive of some form of metrics and measurements there. What's Rest's view about that?
I think an interesting way to think about the service standards that will be mandated or published or whatever it may be is that it's not necessarily about what they are. It's actually the impact it has on the industry and the fact that it helps funds actually think about what they're doing with a lot more focus. And when you think about the nature of the questions that get asked, is it are we too slow, or is it that you're being too conservative in the application of the rules that you're applying? And sort of like having focus put on those sorts of things make you think about the problems that you have in different ways. And so you may find it's just been the prompt that you need to sort of think about, have you tilted too far to compliance or risk as opposed to the lived experience of your members? And it also makes you think to Jocelyn's point around, have you invested in the right tools or processes or training, for example, to make sure that you're delivering consistent service experiences and the like. So for me, it's more about what it's actually doing to the industry in terms of what they're focusing on and how they're responding than coming up with sort of like a number or, like a number of days that something may need to be done in, because I think no matter what number anyone comes up with or what standard people come up with, we're always going to want to do better. Because most super funds, I'd say all super funds, are actually in existence for their members, and we want to do the right thing by them. And so, we will always strive to do better than any benchmark that's actually been put out there.
ASIC has certainly had service standards, particularly around death claims and other claims in its sites. It's indicated it's going to keep focusing on that. It's not necessarily been a comfortable experience for the industry, Brendan, but has it overall helped us, do you think?
I think so. And I think by part of the report that was published, and we, thanked ASIC for that contribution too, because it really did give us a good look at what the experience looked like across many funds. And as pointed out in that report, sort of the funds are different, and there are different characteristics of different funds that lead to different outcomes for different members. And that's an important part to remember when we think about, sort of like what the outcomes of service standards look like for different funds. If you have a fund that's got really large balances where most members are, receiving advice from a third party and are being looked after and managed, will always have a different outcome to a large fund that have got a lot of members that don't have advice, that sort of are less engaged with their super. Now, that being said, it gives us a really good benchmark in terms of, what does exceeding expectations look like, and what should our goal be, and where should we be thinking about heading? And that's what we've done with that report. We've actually used it to, really think deeply about sort of like what we do and where we focus our attention.
If I could just add to that, I think that for me, the valuable mandatory service standards comprise of two things. One is, what's the member's expectation? So if someone dies, the only question a member will ask is, how long is it going to take me to get paid? The other one is the behavioural aspects. So in terms of the fund's activities or the administrator's activities. So is there a mandatory service standard that says that a file can't remain untouched for more than 10 days or something like that? So I think if we can separate out those two things, because there's been a lot of talk about the end-to-end time frame thing. End-to-end is very important to members, but it's actually the behaviour and the activities of the administrators and the funds that will determine whether the members get the outcome they expect or not, because they may not, particularly in death benefits, and it's the exception, not the rule, so we must not focus on the exceptions, we must focus on the rule. But some members don't want to talk about their death benefit until they have a chance to become reconciled to their new life. What's most important there is the behaviour of the administrator, that they don't just forget about that person and let that drag on and expect the beneficiary to be proactive about contacting the fund. So I think that if the mandatory service standards can actually differentiate those two things, I think they can be much more meaningful for both our industry but also for members and beneficiaries, but also enable us to do the right thing by members and meet their expectations where the member is at.
Yeah, that's a very good point. And I think that sort of like anyone's experience with their super fund is highly personalised. It's never going to be captured by a single standard. And your point, Jocelyn, about particularly death benefits and people wanting to engage. Like, we've had cases where we've reached out to people and they said, we are not ready to talk about this and won't be for some time. And you just wait and you just make sure that or they know that you're there for when they're ready. And I think the case that comes to mind, it was about 6 months later, they rang up and said, well, I'm now in the right place to sort of deal with this and think about what we would do with the death benefit that was waiting for them. And so I think that goes to the nature of any service standards that get applied to a group of funds that are looking to differentiate and exceed expectations of their customers and members and everyone else, is that it will actually just provide a guide and help the industry and each fund look in the right areas to make sure that we at least are setting a minimum standard and a minimum expectation at an industry level.
And to your point before, Brendan, I think what's really important though is that it's not an excuse for not taking a risk-based approach and not thinking about, has the world changed since claims taking was introduced, which is part of the Resolution of Complaints Act, not part of SIS, and was only ever a protection for trustees to enable the timely payment of benefits. Are we taking the right risk-based approach? Have we thought about, with these mega funds, is the risk of paying a $10,000 death benefit twice, is that outweighed by, do we necessarily still need to do claims taking to protect the fund for a $10,000 benefit, for example? And I think we absolutely, in conjunction with the mandatory service standards and in conjunction with ASFA's standards, we absolutely must be thinking about what's the right risk-based approach to these transactions in 2025, not in 1993.
That's a great place to leave the conversation. Jocelyn, thank you so much for that. And Brendan, thank you very much for joining us. I think one good point is that certainly the AFCA complaints data is definitely trending in the right direction. So superannuation as a sector is moving in the right direction. Thanks both of you for joining us on Voice of Super today.
You're welcome. Great to chat.
Thank you.
And don't forget to subscribe so that you can get all of the latest news and conversation from the ASFA podcast, Voice of Super. I'll catch you next time.